Well, good morning, pro traders, and welcome from a rainy and cold Southern Cape. The ocean is looking very impressive, windswept, tucked away between the mountains and the sea here. It's been quite a chilly weekend, but it's very beautiful. Looking forward to spring, though, I must say. So, what about you guys? I know some of you are in the Northern Hemisphere, but we're looking forward to the earth turning and getting the warm weather back on the side. So, I hope you guys had a great week last week. Obviously, we had a run in towards the non-farm payroll, where a lot of people sit back and take it easy and disengage from the market. Certainly, I think last week non-farm didn't really do anything. It usually doesn't do anything to help us. It's one of those highly convex moments in the market where if you have the right kind of strategy, even if you only win 1 out of 4 trades or do well once a month, you can actually be doing quite well. But overall, in terms of maintaining the smoothness of your equity curve, it's often a good thing just to disengage from the market for the few days in the run-up to non-farms, as the market typically pulls back and gets quite choppy. And certainly, I think last week, or late last week, was no exception. But overall, I'd say we also had we were talking about this last week, had a pretty good month last month, and last week was a reasonably good start to this month. Nothing spectacular, but nice and solid. And I think, as always, if you know when to engage with the market and when not to engage with the market, then you should be doing pretty well for the month already. But I think that's also key for many of you. And looking at a couple of people's results last week, I think it's one of the issues that remains with a few of you, where you maybe are looking for something that's not there, or maybe not being strict enough with your selection criteria. So I think just today it's worthwhile spending a little bit of extra time looking at what went down last week, where we actually took trades, where we didn't, where the opportunities lay, and also we had our fair share of losing trades as well. What those were, but also we can have a look at which trades we avoided. So if there's anything specific, any markets that you would like me to spend a bit more time on as well this morning, then please do drop it into the chat box, and we can do that. And as always, if you've got any questions, likewise in the chat box, or if you're watching this as a recording, in the comments below. Right, so starting off as always with Euro USD on the weekly time frame. Last week we had ringed the previous high, so a very short bullish wave there just for that single week, and coming back down to test the support level on this channel. On the daily time frame, the bottom of the channel is a little bit closer, and you'll actually see we are currently bouncing on the bottom of that channel, on that support level. It's tested a little bit more through the course of this morning, but so far, certainly it's very early in the day on a Monday, but so far nothing has transpired with this yet. But it's showing some potential. Let's wait and see. We never second guess the market. Don't assume that just because we are on the support level that it's either going to bounce or that it's going to break through. We have no idea which it's going to be. We don't need to know. We need to, however, wait and let the market prove itself. So nothing for us there at the moment, but keep an eye out for it. And certainly we didn't do anything with it last week. Here on weekly for the cable, we've had nothing happen last week, just this very small inside bar. We noted beforehand that the market has bounced off the bottom of the channel quite impressively. And as you can see here on the daily time frame, looking like this, last week just going pretty much sideways after we had that very strong V-shaped reversal. So again, nothing for us to do. We are still inside of our HDC channel. We don't have any valid WM pattern to trade here either. So we staying away from, well, I'd say most of the majors and the minors still are not really any good for us. And here you can see on dollar yen, likewise, bit of a bullish low test here inside of the channel. So this bearish wave, however, still intact. For the meantime, let's wait and see what happens. This bullish low test, maybe a a sign of what's coming through the course of this week in giving us a higher high. If we do get a higher high here without the market going all the way back down again, this low will be ringed. So about a 6-week bearish, slow bearish wave on the weekly time frame coming to an end, and perhaps we'll see a retest in the next month or so of that resistance level. Here on daily, looking like that, we did have in the early part of last week a very brief breakout, just breaking below the previous support level, but immediately pulling back inside on the next day. If you were looking for an overlay on that, I don't think the first one worked out, but certainly the second one did. Remember that the main place for an overlay is at the end of a phase 1 wave in a trend. So if you're looking to trade the overlay, and I think some of you are in more, or in a wider set of conditions, then I'd say you should probably just refrain from doing that. You need to get used to trading the strategy. Certainly those of you who learned the basics of it in the boot camp. Remember, it's all about selecting the appropriate conditions first and foremost for all good strategies. And when it comes to the overlay, you want to be outside the channel in a phase 1 at the very least. All right, so that's an example there. Dollar Swiss here on weekly, also absolutely nothing happened last week. We just had another bullish candle going against the direction of that wave. But as we spoke about last week, we did have this bearish breakout. It didn't last very long. Certainly Friday with non-farms, we saw the very strong bullish impulse candle pulling us straight back inside of the channel. But before that, we were obviously looking to trade this on H4 impulse. I think the last one that we looked at was over here. And if I 1, 2, 3, 4, 5, 6, yeah, that's correct. This got stopped out for a relatively small loss before getting a very strong reversal over here. And I haven't got it on the analysis, but if you were trading an overlay, then likewise, I think there was the first one didn't work, the second one did. So focusing on the core strategies though, as always. Right, USD Cad, also nothing going on really. Also just another end of the week with a bit of a bullish candle on Friday. Deep inside of the channel here on daily. We haven't really been doing anything with this one for a while. If you've been trading dollar CAD, then I'd like to know why. This is really the sort of instrument which is worth leaving completely alone for now. So there's no real sign of trending conditions. We saw the end of the bullish trends quite some time ago. I did notice, however, that some people have been looking to trade the USD CAD, and really it's a mystery to me as to why you would want to do that. There are other pairs that have offered much better conditions further down the list. Right, let's just look at weekly first here on Aussie. Still very much outside of the channel here. As we mentioned last week, we had the previous low ringed, end of that bearish phase 1, which means we're in a retracement corrective phase 2 wave, which is just showing very weak cyclicity. We also had a stab at this. I think also it was, in fact, was it last week? Let's double check. Yeah, okay. So, and in fact, today is another go on this. So we would definitely be another trade on this. We had a bearish hybrid on this one, which did not work out. The hybrid, as you know, probably works out, well, certainly less than half the time, but with a very high reward to risk ratio. So quite deeply convex, but a great strategy nevertheless. So those of you who've been playing around with it after our boot camp, you should have spotted the hybrid last week with this class 4 M pattern. And it didn't work, however, obviously. So that got stopped out, but we've actually got another setup this morning. And if you are going for hybrid trades, then you should have actually shorted the market first thing this morning. So just let's see what happens there. Remember, it's still in a phase 2, but what makes this a class 4 is the fact that it's still making higher highs and higher lows. The reason why, actually, I beg your pardon, this is class 3. It's actually class 3. It failed to actually give us a higher C close, which is a good thing if you're going in a bearish direction. So that's why we looked at this. So that high test over there failed to close above the preceding wave high, which means that this is obviously of interest for us to short this. Class 3s being the main type of pattern that we look at for the hybrids. And if you guys are interested in me talking more about that, well, it's stuff that we have always been talking about, but I am busy finalizing the training on this for you in the academy. So I'm just introducing the terminology to you over the weeks as we lead into that. So do keep an eye out for the new material coming out in the academy in the next couple of weeks. Right. So Kiwi is still pretty boring. Nothing really for us to look at here. I'm also just wondering if this is updating. But in any event, it's fine. That's what it looked like on the weekend. So we still are very much inside of a channel here on weekly. Still seeing that bouncing across or along that support level of our channel, which means we really haven't been interested in doing anything here. And on the daily time frame, nothing really doing. No valid patterns of any kind. It did test outside of our 4-wave channel, but it's just pulled straight back inside again, obviously on Friday. So that's not of any interest to us either. Here we go on Euro Yen, deep inside of the channel. And not only that, but even our ghost channel isn't really going to be doing anything for us. So we can't do anything with that either. But we are, just keeping an eye generally on this because we might end up with a valid M pattern for those of you who are looking to trade that. But I think still some way off for that. And here on the daily time frame, likewise, nothing doing. So don't worry about all the stuff. We're just playing around with these phase 2 reversals. But it's not a valid setup in terms of the rule sets that we discuss. Right, so Gbp Yen, this one does have the ghost channel boundary, and now quite a lot further up with that low being ringed by last week's weekly candle. So the channel at least narrowing down here on the weekly time frame for Gbp Yen. Doesn't mean anything for us for this week. We are not interested in trading any of this very choppy behavior. These types of market conditions are the sort that we stay far away from. But as time goes by, we keep an eye out for that to change. Same thing with the Swiss yen. Nothing doing for us. We did have a bullish impulse candle and wave last week, but it is inside of the channel. So that's not really anything for us to look at there. And here on the daily time frame, I think we discussed this a while ago, where we actually we saw how we discussed this last week, where we saw the breakout from the weekly channel, pulled back inside, and likewise, we saw that weakness with it coming back inside of the previous channel. Now we've also got a failed, false breakout here with a failure for this trend to establish itself, giving us a ringed high here with Friday's close. So nothing really for us to do. If you had looked to go long on this because of that, well, just remember that that's all okay. But once again, non-farm payroll doing its thing and not giving us any continuation of the previous breakouts, everything turning around and coming back in the opposite direction. So for those of you who stayed away from non-farms, that's an example of why certainly last week we would have paid to do that. CAD yen, likewise, not of any great interest to us. We do have the ghost boundary of the channel, which is the future bottom of our 4-wave channel, a lot higher than it was before. So let's wait and see if we do get the market coming down, and I'm not saying it will, but if it does come down and break below this level in the coming few weeks, then we may well be looking to trade this on the daily time frame. But at the moment, nothing, and that's also nothing for you to worry about. But interesting just to look at how some of these patterns do play out over time. So our yen pair is not really offering us much at all. Aussie yen likewise, maybe a little bit more bearish. The Aussie weakness being quite a strong theme across the markets for quite some time, well, certainly the last couple of weeks. We discussed that before. So here on daily as well, likewise, because we're stuck inside of the channel on weekly, we wouldn't necessarily really be looking to trade this. So yeah, don't really bother. Let's move on to our other crosses, because obviously the Kiwi yen likewise is pretty useless to all and sundry. Haven't really been looking at that for quite some time. Right, so Euro GBP being the first proper breakout that we can talk about, where on Thursday we saw this break and close outside of both the 3 and 4 wave channels. So that was obviously now an opportunity for us to trade this on the lower time frame. And we are currently in a short on this. It's not really going anywhere this morning. It's pulled back in this phase 2. So not really interested in that for the moment. Well, I should say we're not seeing any development of this trade at the moment, but we are actually in a short here. And that's pretty much what it looked like. Now, again, if you were waiting for non-farm payrolls to be done and dusted, you would not actually be in a trade here at all. So, and that's fair enough. So if this does continue to remain outside of those channels, and at the moment it's looking pretty promising, there hasn't been any strong pullback over here, then a bearish impulse candle will give you another opportunity to short this. So do keep an eye out for that. Euroswiss, so for us, I noticed a couple of people starting to jump into Euroswiss last week, all of a sudden. Look, if you weren't trading it before, you shouldn't start changing your mind when you are deep inside a bearish phase 1 or any kind of a phase 1 of a trend like this, because as those of you who did that found out, that's precisely when the market's going to do you the favor of swinging around and stopping you out. So you either do it consistently all the time, or you don't. And certainly when you've got a long extended phase 1 of a trend like this, and you haven't been trading, let's say, H4 impulse on it, that is not a good time to start doing that. So we actually, if you do trade Euro Swiss, you would have done pretty well out of it in the last few weeks up until that point in time. But when the bearish cyclicity came to an end last week, it came to an end with some, well, you can see how it started going sideways in the lead up to non-farms, and then obviously on Friday we saw that very strong bullish breakout here on this time frame. So yeah, there was nothing wrong with trading it if you were trading it consistently before that. Certainly there was plenty of profit to be extracted from this market, which in the last couple of weeks, which is unusual for Euro Swiss. But if you don't trade it all the time and a certain strategy on it all the time, then you should stay away. We'll just be consistent in what you do. Euro Cad, absolutely nothing going on here for us at all. Still not interested in this on either of, well, any of our trading timeframes. Charts updating a bit slowly. Moving on to what should be Euro Aussie. Very slowly. So let's just look at weekly first. Right, so this has obviously been much more interesting over the last while, as we know and have discussed many times. But last week was an end to the party on Euro Aussie. We had this strong, well, a decent, I shouldn't say strong, it was a decent phase 1 wave after we had the breakout from our 4 wave channel. But last week that was quite a significant turnaround. So if you've been trading it before, and we've discussed this, there were plenty of opportunities to do so on daily impulse and what have you. But really, the whole of last week was all about a bearish retracement on this pair. So if you had been in any daily impulse from previously, that would have been stopped out probably around break even or close to it anyway. Looking at this in terms of the H4 impulse, however, we spoke about, many of the winners that we had beforehand, if you look back at our previous Monday morning market reviews, but there wasn't a single setup through the course of last week. So if you were paying attention to the fact that, well, let me say, all of our setup criteria, you wouldn't actually have had a setup to go long on this. Remember, if you're trading H4 impulse, you need to have reason to believe that you are in a phase one wave of a trend. And obviously, in this case, it would be a phase one wave of a bullish trend. And that all came to an end in the early part of last week. So certainly by Wednesday, you would have stopped looking to trade this. Let's just have, just confirm what date that would be, because I think some of you pushed the limit on this a little bit too much. Third, so certainly from the 4th, there would have been nothing left for us to do. The only possibility maybe would have been around here. And if you'd taken that one, fair enough. But if you're looking at the cyclicity on the lower time frame, likewise, you should have noticed that that was a goner. All right. So everything else, though, if you were trading maybe overlays, you would have had a decent. You would have, if you'd lost one, you would have won one as well. So not too bad there. But when it comes to where we are now, we are still outside. No, I beg your pardon, we haven't actually updated this. We've pulled back inside of the channel as well. And that's another thing to note. That actually took place even sooner. So 1, 2, 3, 4, 5. Yeah. So by the close of play on Monday, a week ago, we had a close back inside of our 4-wave channel. And as a result of that, there's, you should have at least, certainly if you're a channel trader, you would have stopped trading that. If you're a WM pattern trader, you wouldn't have really been looking at this either because of that weakness. So right from, in fact, Tuesday morning, you would have pulled back from looking to trade this. So the earliest you would have looked to, the last day you would have traded a H4 impulse on this would have been last week, Monday. And as you can see, there was not a single setup candle for an H4 impulse. So this over here wasn't actually therefore even a valid trade for you to go for either. You should have left that completely alone. Right, if you're interested in trading the hybrid on week trends, then certainly we did have a setup here. Again, remember that it was non-farm payroll Friday. But as it happens, this one is still actually going. So it was quite aggressive to get into this pretty late on Friday, but it was non-farm payrolls had passed us by. So late on a Friday evening is still quite aggressive, but that was a valid setup for a hybrid trade with a class 3W pattern showing itself. And well, so far it's surviving. Let's wait and see. Interesting. So if you're trading the deep targets on this, that's where it would be. You can see it's quite a good reward to risk ratio, but most of the time we just use our normal 3-6 step trailing stop on these hybrid trades. Certainly that seems to be working quite well at the moment. All right, so that's Euro Aussie, a bit more to look at on that one. I think when we get to GBP Aussie, likewise. Euro NZD, however, absolutely nothing. You can see here both on weekly and even daily, where we had that bearish impulse candle on weekly, it's still very much inside of the channel here on daily. And we've noted that for quite a while, that this is really very much just a sideways market, the most sideways out of pretty much all of them, I'd say. Gbp Swiss, looks like we're going to have this low ringed possibly this week, but it's a little bit too early to say. Nevertheless, technically, this is still a bearish wave, and we're back inside of the channel. It tested the support level, but at no point were we actually able to look at trading this. And the only way we could have done that is in a bearish direction. And likewise, through the course of last week, you could see there was nothing doing for us. We were deep inside of the channel. So another one to stay far away from. GBP Cad, likewise, that's no good to us on weekly or daily. But GBP Aussie, probably the hero of the last month. This is really the pair that we've done well out of. There's been a lot of action on this. Also been quite good for showing people how market transitions from one, all the conditions that are appropriate for one strategy to the next. But yeah, so last week, likewise, however, we did have that retracement here on daily, just confirming as well that on weekly, we are well outside of the channel. Last week's weekly candle being this bearish inside bar, which if you are using only the higher time frame for your selection criteria, depending on your risk appetite, you are either treating that as a continuation or you're not. So if you're treating inside bars, and certainly bearish inside bars, as a reason to step back from the market, then you wouldn't have looked to trade this at all. But if you got a more aggressive risk appetite, then you will continue to do that. But that's all for this week. Last week, we were all still raring potentially to go on this for a daily impulse. And if you had if you had been looking for a daily impulse, unfortunately, nothing transpired through the course of last week. The first opportunity to do that was, in fact, Friday's close, and therefore this morning. So that brings me back to the point on your risk appetite, your how you use these filters for your own risk profile. This bearish inside candle, if inside candle is a no for you, you can't take a daily impulse on this. However, if you are happy with it, then you should have actually gone long on this morning already. But there was nothing else for us last week. What there is also, of course, is the potential for a hybrid. Well, in fact, there was a hybrid. Remember, a hybrid strategy, we are just using the lower time frame to identify the end of a phase 2 and therefore potentially the start of the next phase 1. And that actually took place where we fourth, yeah, so Thursday, well, what am I saying, Wednesday, yeah, late Wednesday, we had this bullish impulse candle, nice class 3 W pattern, signifying the potential end of this bearish retracement, the cyclicity coming to an end over here with a bullish impulse candle. We managed to survive it with our 3-6 rule on the 4-hour time frame, and we can actually update our trailing stop, or the software would have done this already for us on the actual trade. But that's pretty much what we'd be looking at the moment, almost at break even on this one. And yeah, if you're using that a higher time frame target, decent reward to risk ratio, what does it say? It's good to use the so far the 3-6 trailing stop method is working very well for the deeper targets on these hybrid trades. So yeah, that's pretty much it at the moment. And as I say, you know, that's a valid setup for a daily impulse as well. If you're in that, you'll be trailing your stop as per usual on that going forward. Now, remember, we have no knowledge or guarantee that this is going to work out, but I would say that has been pretty much picture perfect for us. It's worked very well over the last several weeks on this pair, and has helped to keep things ticking over. All right, so end of that one. Gbp NZD, absolutely not. For whatever reason, there's been nothing for us to do on this for quite some time, so stayed far away from that. Okay, moving into the other crosses, we had another retest of the support level last week here on the weekly time frame, but it's just a bullish low test, pull back inside of the channel. So it really is respecting that support level at the moment here on weekly. And on daily, well, that's what it looks like, you know, both of those tests there, and certainly nothing for us to look at here when it comes to looking to trade the lower time frames. Aussie Swiss, another example. Let me just go to weekly first. Another example where we're outside of the channel. There's that Aussie weakness showing itself. And again, here you can see last week was just a pullback. You know, before that we had that very nice bearish impulse candle, but it's pulled straight back again. This used to be called the Twin Towers. No longer, of course. But in any case, there's the pullback. The whole of last week was a pullback here. And you know, it actually managed to just close back inside of that channel, unfortunately. But if you don't mind trading with a marginal inside C close, we're still looking for the end of a phase 2 here, because this is we haven't seen the end of this Aussie weakness. Let's put it that way. And if you were looking to trade a hybrid, this is an example of one that didn't work out. So here we had a class 3 M pattern with a bearish impulse candle. Entry would have been at the open of this candle, high over there. So managed to trail it a little bit, so reduced the open risk on this to just above half the original. But then this just continued, and that's a class 4. So nothing for us to look at the moment, but this may well turn around and give us another entry opportunity. So if you're trading the hybrids, that's definitely one to look out for. But obviously, you need to be happy with the fact that we ultimately did get a close back inside of the channel and the future XA leg. Because remember, with a hybrid, we're always looking for the next bearish CD leg, which means that at the moment, although this is AB, it will be X to A. So if we already had a close inside C close, and if that is against your rules, then you can't take that trade. So it's a pity when it happens like that. But that was last week for you. All right, Aussie Cad. Let me just look at weekly first, just to show you that again, we had that breakout. We discussed it last week, but also through the course of last week, we've seen how the market came back up with this bullish candle. Having said that, we are still very much outside of the channel. That test over there, we've still got the outside close. So this is still something that we're looking to go for. And if you are trading the more aggressive set of filters for the daily impulse, then likewise, we had this bearish impulse candle on Friday. So you should have shorted this market this morning already for a daily impulse. So nothing for us to do yet on the lower time frames, but of course, if you're a channel trader and we get a close outside of our 4-wave channel today, then tomorrow you will be looking to trade this with the lower time frames in a bearish direction, obviously. Right, Aussie Kiwi, another one that has done well for us. Looking firstly at weekly. So we had the preceding week, we had our outside close, the breakout from our channel. So last week, basically, this bearish candle here, bearish impulse candle, giving us plenty of trading opportunities on the lower time frames. So if you had been, let me just 1, 2, 3, 4, 5. So I think we spoke about this being a preceding potential for a bearish daily impulse, and that we needed to also potentially look out for that. This very strong bearish candle last week, Wednesday, really messed things up for you if you wanted to do a daily impulse trade. But if you've taken one anyway with your, you would have had to use the ATR stop on this. You would still be in this trade. So that's all well and good. Likewise as well, though, with that having been outside of that channel, certainly from where we here was also a hybrid, by the way. So quite a lot happened here. Just want to point out, though, that we were outside of the channel already on Tuesday's close. So from Wednesday morning, if we just go now and have a look at what happened on the 4th, on the H4 time frame, we did reasonably well out of this one. So here you can see quite a lot of stuff that actually happened. So we spoke about the preceding week stuff already. If we didn't speak about this one, which was a bog standard H4 impulse, that got stopped out at break even. It gave us a very nice entry opportunity for an overlay, which went to a take profit, not the full take profit, unfortunately. But it was a nice setup. And here again on a hybrid, looking at the phase 2 on the daily, because of this bullish cyclicity that we had here with this phase 1 followed by phase 1 on the 4-hour time frame. Phase 2, this is just a standard class 3 M pattern at the close of this bearish impulse candle, and that was just textbook. I mean, it doesn't. We couldn't possibly know that this was going to happen, but of course, it's very nice when it does on a hybrid, and bang, off it went. Now, unfortunately, it didn't go to the full distance, obviously, which is quite a bit further down, but using the 3-6 trailing stop method, we got stopped out just over here. So still a nice trade, a very nice trade indeed. And then again, another similar pattern, which we managed to survive with last week's. Well, certainly there was volatile activity on Friday, as expected. Didn't stop out this trade, and we this morning it's showing some decent potential yet again. So 1, 2, 3, 4, 5, 6. We can actually, well, we would have actually trailed this stop now to this point over there. So a slight reduction in open risk. And if it keeps on going down, we should be able to get to break even quite soon. So no idea what's going to happen on this. Already had a nice winner. So if you look at, in fact, if you look at the history on this, and in fact, just over the last week and the week before, we had a winning overlay. We had a winning hybrid on this. Also, using the 3-6 rule, got stopped out over there. A break even H4 impulse, a nice winning hybrid over here, and we are into another one. So this has actually been pretty decently profitable for us. And you know, looking here at the daily time frame, with us being well outside of the channel through most of last week, is pretty much the reason why. So just also to confirm the fact that we're in this bearish phase one wave outside of the channel, therefore a potential trend on weekly, means that if today we got to get a bearish impulse candle, that's a setup for a daily impulse as well. So a lot of action on just a couple of pairs here. And the vast majority of them we've left completely alone. And really, folks, I've said this a million times, you're probably bored of me saying it, but it's all about selection. If you are able to avoid markets where the conditions are not appropriate and only stick with those markets where the conditions are appropriate, you're still going to have your fair share of losers. But especially if you're using a convex approach, then it's almost impossible to have deep drawdowns on your account. And certainly over the longer term, as you know, it's not that difficult to be consistently profitable. All right, so let's just swing past the last two pairs here. Kiwi Swiss, nothing really doing for us deep inside the channel. But obviously we saw this the previous week. We saw a breakout here, also turned straight around. Nothing for us to do once it pulled back inside of the channel. No valid pattern. So 1, 2, 3, 4, 5. Yeah, so very early last week we would have moved away from this. Just looking at what we did do on the H4 impulse while we were outside of the daily channel, we did get a setup for a I think this was also, you could, if whether you're looking at this as a H4 impulse or a hybrid, doesn't really matter. You would have taken exactly the same entry. It would have been the same setup, and that one got stopped out at break even. But we got either one of those overlays. If you'd taken either one of them, it was a nice winner anyway. But as soon as that happened, we were back inside of the channel. So there hasn't been another bearish trade for us here since then. So not really interested in that. Going forward. And then finally, now currency pairs, Kiwi Cad, absolute nonsense. Nothing going on here at all. As you know, we traded this a while ago, but all of that came to an end. And although we've been looking at how things have been panning out with the end of these phase one waves, and if you want to be aggressive about the overlays and use it a lot more often, then look at the end of phase one waves. That's it. But for practice more than anything else. All right, so let's have a quick look at our, well, first of all, gold. So this is interesting. Okay, so I haven't really looked at this morning. Let's just jump to daily here. So wow, okay, that's all on the boil, obviously, as we speak. Something happened this morning on our broker here to drive price quite far down. What I was going to say this morning on gold is that we had the bearish breakout on daily. So if you had been looking for that and dropped down to the H4, I'm not getting my price feed coming through this at the moment on this one, but had you done that, That's what it looks like on H4. Okay, so probably no opportunity to take any advantage of that. We'll have to find out what's been going on this morning. But that looks quite interesting. But certainly not something that we have been, not a market we've been in, so it wouldn't have impacted us. And then just a general commentary again on our the pairs, well, not the pairs, the indices that we trade. Dow making another all-time high last week, just touching that high and also giving an outside close. Looking like this on daily. It was Friday as well that gave us that higher close. And yeah, if you are trading daily impulse on this, then fair enough. That's a setup. Nothing interesting this morning on this though. For lower time frames, S&P, similar picture, always a little bit more extreme. And finally, the Nasdaq, even more extreme. So let's just quickly look on. There we go. So on the daily time frame, Nasdaq making that all-time high Thursday close, but pulling back again inside of the channel on Friday. So still trending, obviously, you know, after we had that breakdown in cyclicity a couple of times, in fact, over the last few weeks, there's bullish breakout, still trending. A lot of people are staying away from these markets because they feel that they're overextended, but excuse me, with the US government about to pass a $1 trillion spending budget, that money's got to go somewhere, and it generally goes into the stock market. So who knows where this is going to end? It could carry on for quite some time, or it could come to an end very quickly. Right, so those are all the markets that we look at. Any questions from you folks? Everyone happy for that? I hope it's clear that the vast majority of these markets really need to be avoided at the moment. And it's when you start chasing after trades or looking for trades that aren't there, that you can end up hurting your account far more than you need to. So it's, in fact, I think it was Jesse Livermore said there are times when you should go long, times when you should go short, and times when you should go fishing. And for most of these markets, it's the time to go fishing, so or play golf or whatever it is that you do. But it's so vital to be selective in your trading, and I think that many of you are being quite fast and loose, and this is definitely a time to be really tight in your trading, in your selection, and only taking those trades which are clearly in conditions that are suitable for the strategies that you're trading. Also, if you're trading on anything other than a test account, you shouldn't be trading with a strategy that you don't know well. So if you're not fully up to speed with the overlays, we've been teaching it, and the hybrid, then you should be getting to know those strategies on a test account. Don't do it on an account that's meaningful to you. All right, folks, I don't see any questions coming through. I hope you've enjoyed this morning's review. Remember that you can always pop in a comment or question with the recording, and I will certainly answer it. Folks, for those of you who are funded account members, we are having our monthly catch-up and Q&A tomorrow evening at 7 p.m. So please do diarize that, and I'll chat to you guys then. And then on Wednesday, I'll be doing some open training. And also then on Thursday, we're going to be doing some training on the WM patterns again. There's been quite a few requests for that. So I'll be introducing some of the additional tips and tricks that we have using that, and the stuff that's going to be coming out in the Academy in the next few weeks. We'll be talking about that for in our members training on Thursday. You're welcome, Greg. Awesome. Okay, folks, just one final reminder. We are going to be chatting to you folks who've shown interest in the mentoring program that we will be launching in September. That's coming up quite soon. I'll be sending out an outline for the mentoring program to those folks who are interested in discussing it with them. But in case you are interested in the mentoring program, please do drop us an email at support@gptacademy.com. Alternatively, we will also be putting a link for our short questionnaire for that. It's just a very short application. Just want to get an understanding of what you're hoping to get out of it. And we will be discussing it with each of you in person as well. So it is something that I think for those of you who really want to fast track your progress and get your accounts ticking over nicely and get rid of all of some of the fog that you might have and get a bit more direct personal interaction with myself and some of the other successful traders, then this will be the program for you. So do let us know if you're interested in that, and we will be in direct contact with you. Welcome, surprise. Actually, we do have a question. Excellent. Hybrid on Euro GBP H4. To talk about that, I think Euro GBP is it's not yet a hybrid. The reason for that is we're not really in a phase 2 here. Let's just have a look at the lower time frame cyclicity. So we already had the short here for the H4 impulse. It's not, well, I suppose if you're considering at the end of the day, this is a bearish phase 1 wave. I know we've got a non-relevant isolated low here that went a little bit lower. So bearish cyclicity is still intact here on the execution time frame. So the answer to that is no. If we were to get bullish cyclicity here, it would indicate a phase 2 wave on daily, just like we had here. And when you see the breakdown in that sequentiality of that cyclicity, as we saw here, then that would indicate a bearish hybrid. And that's precisely what this is over here, not really showing an aggressive take profit, but certainly there was one. So the setup for the bearish hybrid was sometime in the past, but that doesn't mean we don't have H4 impulses following it. Great. All right, folks. Have a great week further. I'll be chatting to you, I'm sure, all during the course of this week. Remember, it's also August, folks. One final comment before I go. Northern Hemisphere holiday season, generally not the most interesting of trading conditions. And again, reinforcing the need to be very tight about which markets you trade and stay away from the rest. Perfect. Guys, I'll chat to you soon. Bye for now.